one.
Well, the Bears came out swinging yesterday morning, and they kept on swinging. They got us down about 40 handles, but you know what? Some of the buy the dippers were still out there. We got a 40 handle rally going off that low, but what is Pump and Powell going to have to say about this? We'll discuss that much more. We got to figure out what's going on with these airline stocks, gold and ETFs. So who do we dial up for that? Frank Bulldog Holmes from US Global Investors at 8:35. It's Wednesday, it's Fed Day, it's pre-market prep.
Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your hosts, Joel Elkanin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I'd buy that stock for a penny.
With everything you need to start your trading day.
Good morning, traders and investors. I am fired up today. I'll tell you why in a little bit. We're up 10.5 handles at 4,500.50. Little dip overnight. That was bought, traded just off the highs of the pre-market session. The buck, man, 105. Is this going to get over 105 and break out, make a huge move? We don't know. It's down 14 cents at 104.68. Bonds up a quarter point, but still hanging out near the lows of the move, 118 and 15/30 seconds. Crude, we talked about hitting 92. Well, it only did one day. Now down to 76 cents at 89.73. Gold, flat. Silver, that's a little bit more of a percentage gainer, up 13 cents at 23.59. And Bitcoin, inside day, that's what we're working on so far. We're down $85 at 27,185. Triple D, did you have a pillow at your desk last night?
Oh my gosh. I needed a pillow at my desk. These nights are getting slower and slower and slower. There's some action during the day. There's some movement during the day, but I tell you, we're going into this lull. I guess it's a lack of a catalyst. And yes, we're going to get Fed speak here today. Fed rate decision, but we all know, I think, let's bring Money Mitch into this conversation right away here because he'll have the stats for us here too. But I do believe we're sitting at, what is it, Money Mitch, like a 98% chance of no raise here today? Do we have the official number?
You're giving it too much, man. You're giving it too much.
What is it?
99. We got to go one more.
Wayne Gretzky. That's a great number. I love the 99. Anyway,
yeah, 99%. I mean, is that even, do we even need to look? No, I think what we need to do is focus on what, right? We should be focusing on the dot plot that will be released. What will the dot plot, of course, tell us? That will be telling us the projected move going forward, right? How much do different Feds think that the rates are going to get higher? Do we have one more hike rate? Do we have two more on the table? What do you guys think? Only maybe one more, right? And we're done?
I think one and done. Yeah, I think we're definitely towards the end of it, and that's the good news. But the bad news is there's just no pivot coming. There's no, we're going, it's going to be a one and we're done, and we're leaving them up here. Now what?
Mm-hmm.
Everybody was expecting, lower rates to come and save us from the coming recession, and I don't think that's imminent here. I think the Fed's going to stick to it. I think the Fed thinks the economy is fine, and I think the economy is fine too. And I think we're here for rates for a longer time. But yeah, so 99%. So there's a 1% chance that they actually raise rates today.
I found the 1%. It's Preston in the chat.
Is that who it is? You found the person?
The 1%.
He's the 1%.
I think we've been okay on following this for a while. I mean, the media, wants to bring up, different things and make a scenario that's not there. But we're not going back down to those lower rates. It wasn't good to be going lower rates. And how long, you can look at the economic studies. I mean, you take rates up at the pace you did, you just don't see immediate impact, right? It takes time. It takes time. It takes time. It takes time. And I think that's one thing that Blue Putnam, kind of emphasize with us is that, it's going to come down. There's going to be incremental things. Man, if you look at crude oil, you're kind of like hiding under the table coming out for that September number. But
Mm,
there are other factors that go into it, and there's a lag effect. And I think why the number, I mean, it was an okay number, might have been a little bit more benign, is because that crude oil rally, I mean, that took place in the latter half of the month. So we'll all be sitting on pins and needles when Pump and Pile is speaking. Traditionally, there's been some decent up days on the day of Fed speak, but set your alarm for 2 o'clock here, and we'll get the no decision. But we all know it's the conference afterwards that people like to emphasize and hang on every word.
I think it's a very important aspect that you just brought it there with the oil, right? Will Jerome even mention that also? Will that be on his radar? Will he say that, hey, I'm seeing, oil prices spike higher. We're concerned that it could bring inflation back. Comments like that, I think that's what we need to be looking for. And
I
where
don't
will
know
we
if
get
he'll
comments?
call out oil, but he'll say we're remaining data dependent. And oil's oil's part of the data. So
2%? Is 2% still the goal, Joel? Or is that just
I've been
they
saying
won't move from
3%.
that, even though they would probably, be more accepting of 3. They're not going to move from the 2, or they're going to fudge the numbers to make it look like that, which we know that works too. They change the CPI continuously to make it look less inflationary. So they'll find ways to make that look better too. I don't think we're going to see much movement here today. If anything, I think you could see a relief pop, maybe, just because we're still in this choppy environment. I do predict we're going to see a lot more chop going forward. I don't think you're going to see crazy moves, though. I don't think you're going to see this like, we're ripping 40 handles or we're down 40 handles on this Fed news. We're just not in that environment anymore. Volatility is like gone from this market right now. I mean, the VIX is coming down, but you can feel it. It is slow. We are in a lull. We need a catalyst, and the Fed is not going to be a good enough catalyst here today. So we will come into earnings season next month, but we got about 2 weeks here where we just don't have much going on. Especially once we get past this Fed decision here today, I think you're going to have a lot of quietness in this market.
so? Dennis,
What's the retail doing, Dennis? What's the little guy doing?
Nothing, man. This is the issue, is you can clearly see, and it's not, and with my trading, I can get a very good feel for the markets, like especially when you're trading after hours and you can feel the tape, you can feel different things. During the day is so much noise from bots, but there's not as much bots after hours. There's a lot of, real orders, people coming in doing stuff. There's still bots, don't kid yourself, but it's not all bots. The bids and the offers are more humans, especially even in the pre-market. It's humans. Bots aren't really out there as much. They're out there on SPY. SPY's got the bots going. But on smaller stocks, sometimes they don't even have a market. You can get a feel for what's happening. And what is happening is nothing is happening. It is slow, pillow time, sleepy. It's like a lull. It feels like we're just going to go into this period where people are disinterested in the stock market. And that's not necessarily a good thing. We can say, okay, yeah, it's a consolidation period for the markets to eventually go higher. But these markets are already pretty high, with Apple trading 27 or 28 times earnings. It was, a little bit higher. It was almost 30 earnings at the peak, but it's off a bit. Microsoft, trading 32 times earnings at the peak. I mean, you don't want a sleepy market with high valuations, and especially when you're in a 5 or 6% environment here. I think the recipe for success to be on the long side of this market is just not there. And retail is crushed. Don't even kid yourself. There's a lot of retail traders that are probably doing well, especially the ones that listen to Premarket Prep. But there's a lot of retail traders that are absolutely just crushed. Talking to another friend last night, friend from Bright Trading, and he was talking to one of his friends who's got a whole retail portfolio. The gentleman is down 96% on his portfolio. And he's got Lucid, and he's got Workhorse, and he's got INSG, and he's got AMC.
you talking
all
Kathy?
These stocks. I mean, it's all these stocks. These stocks that we're talking about so much on retail platforms and Discord and all these. They've just been crushed. Wish. Remember Wish, that one? That was one of those Atlas picks or whatever. I mean, these stocks are all down 97, 98%. It's honestly incredible that, how hard they were hit. But they were all junk to begin with. They were all pushed on Momo and they were all junk. Now, again, this isn't everyone, and this is just, one example. But I think what I see at night is like, Kathy Wood example yesterday. She's on CNBC talking Tesla, talking about a $2,000 price target, and it can't go up a nickel. Tesla can't even move. I mean, that is an issue. If you're in this full-on bull rah-rah camp, there is a major issue when there is a lack of interest in the stock market. The worst thing for stocks is a lack of interest. Cart, in the Instacart, yeah, it was all great, but obviously come off, and we can go to that too. But I mean, this valuation was over $30 billion at one time. It's sitting down here at 11 or 12. I mean, yeah, it was a successful IPO, but really was it? And then the insiders are all selling all day. Stock opens at 42 and goes to 33. Some people have really been crushed in the stock market. Don't kid yourself. There are some people who have had their butts kicked. So to come and say, yeah, we're going to the next rah-rah bull market, I don't know if the money is there. And it's just not as many people there that are just sitting, on all this COVID money they were given, and then they made all these profits, and then they're pumping them into these stocks, and all this money on the sidelines is going to come in. I don't see it happening. What I see is a lack of interest in the stock market, and that's maybe the most dangerous thing for bulls.
So Instacart is just about 8% above Tuesday's IPO price of $30, wiping out most of that initial surge. It did have a surge about 43% off of that IPO price. Of course, the company provides delivery and pickup services to 85% of U.S. grocers, serving 80,000 stores, and has 7.7 million active customers. One thing that was interesting that I caught, and just diving deep into Instacart, was PepsiCo invested $175 million in a convertible preferred stock in Instacart. So at least they got PepsiCo on their side. What do you guys think about Instacart? And then after this, let's take a look at the other IPO, right? I know everybody wants to still talk ARM.
Let's go
Dennis,
to Cart, Dan.
Yeah, I don't know what to say about this. So do they do your shopping, or like do you call it into the place and then the place does the shopping and they just pick it up? I mean, I really have not done a lot of research, because to me this really doesn't seem like a new concept. I mean, this guy did you listen to him at all on CNBC? Did you guys listen to him at all? He was at Amazon. He left Amazon in 2012. He started 20 companies. They all went bankrupt, and he went to his refrigerator. The only thing he had was a can of hot sauce. And he's like, the only thing people aren't buying online is groceries, right?
Yeah.
2012. I mean, it seems like there's a lot of competition out there. It seems that, people can go and do it themselves. I don't know what the premium they charge, but I mean, I almost would like look at Uber and something like that. They're making money. This company, I mean, they're not coming into the IPO firing on all cylinders as far as growth goes. So it's hard for me to get excited about it.
I think the headlines here and everybody talking about how successful this Cart IPO was. I mean, the stock opened at the highs.
I know.
And tanked from 42 down to $32 here now in one day. This stock is in a technical bear market after one day. A bear market is when a stock falls 20% from its highs. It's in a technical bear market after one day. I don't know if I've ever seen that before. Maybe we have on some of these IPOs.
You know exactly which one.
Which ones?
You should know. There's one, and that stock still has not come. It had the worst performance on the first day. And I'll give you a hint. I'm sure the chat will be all over it. I kind of mentioned it. I didn't mention it directly, but I mentioned a group of stocks that could be competition for this. Come on now. Come on. Someone knows this.
Okay, don't suspense us too long here.
Lyft.
Oh, well, Lyft is just a terrible story all around altogether.
But that's
it
what
never
it did.
It was down 20% on day one?
Oh, my Lord.
I don't remember the day one of Lyft.
Okay,
and it's a stock that I don't even look at now.
Okay.
I used to trade this thing actively. It doesn't move enough. It sits down here at $11. It's just no interest here. And I think it's eventually going on. I probably not saying necessarily to zero, but this stock is probably going a lot lower.
Well, the first month, and that's not the first. I don't know about the 20% the first day, but Dennis, this opened at 87.24 on its IPO. It
Yeah.
hit 88.60 that
And then
day.
straight down.
Straight down, straight absolute.
You've gotta investors. We're gonna talk to the investors here, not the traders, because the traders know you get in and out, you cut your losses. Investors, you've got to respect valuation when you are investing in anything. As a trader, you don't even valuation doesn't matter. As a trader, you're just trading the tape. You're trading. It depends on your time frame. You can trade technically. As an investor, you have to respect valuation when you're paying. When you're buying zombie companies, one that don't make money, you're pushing. Can they grow into money? They better have a path to profitability. Don't be going in something that doesn't have a path to profitability. If they have a nice path, maybe there's an opportunity here. But as an investor, you've got to know the valuations you are paying for stuff. You can't pay $70 billion for Rivian or whatever the hell it was. Was it $100 billion? It was just something really stupid when the thing was up at $110. And we were on this show. And I hope we saved a lot of retailers a lot of money because we hated Rivian. We hated Lucid. Lucid was $35 when I put my price target of 5 on it. Remember, I said that multiple times. $5, I think it's eventually going to. It has never quite got there. I don't know if it ever got to 5. It's 550, 544. It's not quite there yet. But anyways, absolutely right there too. As an investor, you have to respect valuation. Do not let a trade turn into an investment. Do not hold and buy these things at 70, 80, 100 times earnings, or zombie companies that have no path to profitability ever, or stocks that are just on a pure story, like a hot story, and then that's it. That's all they got. I mean, the VFS was predictable. Literally 3 weeks later, the stock goes from 85 to 17. Everybody who bought that thing as an investment is crushed. Do not get stuck. Investors, do not buy stuff that is ridiculously priced. That's my tip of the day.
Yeah, like always, right? I think that one of the things that we were looking at was ARM's PE outlook, right? And we were talking about it. Would this kind of get the lift with AI, or would this be kind of this disaster story here of AI? It seems like so far it did get the lift, has pulled back below the IPO open. What are you guys thinking about it now?
There could be more. But again, I'm not going to invest in this thing. What is the valuation of this thing? Let's just go look. Trusty Benzinga Pro, bring it up here. Details. I think they have it in there now. They had it in there, but I just want to see if they have the metrics in there yet. Yeah, they're starting to get the metrics. So 56. So PE is 140. That's 140 is the PE.
Mm-hmm.
The forward PE is 57. So if they hit the optimistic, those projections will be optimistic. Don't kid yourself. You're still paying 57 times earnings. So it's more expensive than NVIDIA. It's more, wrap your head around that. ARM is more expensive than NVIDIA. I would much rather own NVIDIA than ARM. So it's a no touch for me as an investment. As a trade, is there opportunities? Is there, potential moves? Sure, as trades, you can trade anything. You could lean on the low of the move and say, I think this is at 53.88. I think you're going to get stopped out because I think it's going lower short term. But maybe it doesn't, and maybe it bounces off the lows. As long as you have an out. But as an investment here, ARM Holdings at 57 times optimistic forward earnings and 140 times current earnings, no thank you.
For the price action in this one, I mean, what was the pricing? Wasn't it $40 or something like that? Wasn't it lower? And we thought it might trade higher on that day. That's what I like. That's what I'll keep an eye on. I mean, maybe if it gets down to 40, that's where it was priced. The thing with card, and it was pointed out by Jay yesterday. Not everyone got rich off this. I mean, it depending on when you invest in private equity. The timing of it. So, oh yeah, I got these shares in the private market, and now it's open at a loss. So that's a little bit of different dynamic. But we'll let a couple more days. I'll tell you right now, for CART, just if you're just looking at your short-term technicals, and that's all you have, someone's nibbling a little bit here at 32. Then that's it. 32 support. All-time low was made in the pre-market trading at 31.79. S&P is just creeping its way up here through the 4,500 handle, kind of reminiscent of yesterday until we got some Canadian inflation data and Red Book sales around 9 o'clock, and then that completely turned us
And the
around.
Canadian markets are in a really kerfluffle here. Like, and you can
Fluffle?
see it. Is that a word? Did I make that
I
up?
don't know. I think you did.
Kerfluffle.
One
I
thing
just made
before we
it.
just
Oh,
move
It's
off
a
of
new one
cart.
for you.
One thing,
Yeah.
we can go to your topic there, Dennis. But one thing on cart, if you're noticing that it says Maple Bear Inc. at the bottom there
Yeah.
as the company, that is Instacart, guys. You don't have it wrong. A lot of people
I
are
saw
opening
that.
it up today, and they're like, "What?
Yeah. What is with that name?
I don't understand this. This isn't
Maple Bear.
Instacart. Maple Bear is the company.
Oh, why would you put anything bear in your name?
That's the parent company here, right? And then Instacart is
Yeah.
under their name here. So
Maple
that's why
Bears.
you're seeing Maple Bear there. Don't
Maple
worry.
Bear.
I was like you guys too. I was like, I don't understand it. I'm looking up cart and it's telling me Maple Bear. You're looking up the same company, guys. All right, let's keep going.
Go to these Canadian markets here for a second. I want to
let's talk a little bit about
We're
that.
doing a lot of macro talk here today. It's Fed Day. We're doing a lot of macro talk. The Canadian markets are in a precarious situation in the housing market because one, there's a huge bubble in housing. But two is unlike the US markets where people have 30-year tied up, amortizations where they're tied up in these mortgages and they got their rate fixed. Canada never offered 30-year fixed. They offered 5-year fixed. So people's rates are coming up. So it's one thing, like you're a year and a half into this rising rate environment. You're really at, a few months of peak interest rates. And there's a lot of people who, had variable mortgages. Those people are hurting already. But there's a lot of people who had 5-year fixed. Maybe they're coming in at a 3-year fix and there's only 2 years left on it. Or maybe there's only 1 year left on it. All those people you talk to, and they're like, well, interest rates are going to go back down. My mortgage doesn't come due for another 6 months, and I know they're going to come back down, so I'm going to be okay. But as they're coming due, what is happening here is the banks are now extending amortizations because you have people that literally can't make their payments. So they're just extending out. And we've talked about this. There are some places that, and there were some people that was in, I talked about this article a while ago in the Financial Post, looking at Toronto. And some people have 80, 90-year amortizations now, Joel, because the banks don't know what to do with them. And some of them are on fixed payments. So these fixed payments, as it obviously comes up, the interest rates, that it becomes, less principal you're paying off and you're paying off all interest. Well, in some cases now they're actually de-amortizing, meaning that they're not even paying enough to pay the interest. So they're just adding more term to your loan. So just adding more years onto your loan to be able to make up for it. So the banks are trying to do everything because they don't want a whole bunch of houses showing up at their doorstep here. Take a look at the charts of the Canadian banks and tell me there isn't a major problem here. Bank of Nova Scotia, which I did buy for a bit, I've sold it now. Well, actually, I do have a trading position on, so I shouldn't say that. So, but we'll just look at it. So, full disclosure, I do have a day trading position on this, so which I will trade out of today. But I'm just using it as an example. Bank of Nova Scotia, look what that's done in the last 8, 9, 10 months. Look at Bank of Montreal, what that's done. BMO. Look at RY. Look at TD. What do these things all have in common? Serious downtrends. They all pay really high dividends. Canadian banks have never cut their dividends. Even through the financial crisis, they held up very well. They've never really cut the dividends. It's a very interesting situation here because these banks have come down a lot. A lot of these banks have come down a lot. TD, RY, BMO, BNS, CM, all serious downtrends. Like, look at CIBC, one of the more conservative ones. April of 2022, $65 a share. It's now 40. I think the issue here is we've got a potential housing crisis going to happen in Canada. And that is why these banks do not catch a bid. And that is why these banks are extending out amortizations. And that is why these banks are having some serious issues.
What about, and I mentioned to you this before, and I can't remember what your response was, but for a while the correlations with banks in the Canadian markets was with oil, right? And to see this dismal performance in the face of a ripping oil market, it's just like, okay, well, is that not a catalyst anymore? What is going to turn things around? I'll just tell you on your monthly, Dennis, and I haven't looked at this ETF, this EWC, in forever. But there's a number, and I'm going to give you this number, and it's been good since the middle of 2022. $36, man. Until this, it's there. It's close. It's bumped its head against that so many times. If you're looking for a rally in the this ETF, this market, it's only $1.15 away, and I know it doesn't move. But look at bottom right chart. Look at all those monthly tops there. Highly convicted. I would almost make that a 10-star, Dennis. And the longer it takes to get over that $36 area, then of course you could test the waters on the downside. But that's some major monthly resistance.
And you can look at this EWC chart and say, well, Canada's holding up pretty well. We just haven't gone anywhere. But you want to know something? Oil stocks have gone up substantially in the last couple of months here. Canada is all oil stocks. I think the index is like 30% oil stocks. So you have the oil stocks ripping higher, and the index ain't going anywhere because you got a lot of the junk in there right now. And it's hard to call the Canadian banks junk, but I'm concerned that they might be. I'm concerned here that there's a lot of Canadian banks have lent money out to a lot of people who actually cannot afford their house payments now. And they're extending out the amortizations. And once you're going into de-amortization, now you're extending out the amortization just because they can't even make the interest payment. I mean, this is adding up to a potential problem here. Housing prices are starting to come down in Canada. Building costs are astronomical. So building costs have really, obviously pushed where the prices to where they are. I know because I went through some builds, but where they were building, I've given these arguments before, at $300 a square foot, they were building homes 4 or 5 years ago, pre-COVID. It's now $500 to $600. So building costs have basically essentially doubled in 5 years. And that's why housing prices have went up substantially. But the problem is that there's just not enough money to be able to, how is a McDonald's worker getting paid $17 an hour, which sounds pretty good, $17 an hour? How are they ever going to afford a $500,000 or $600,000 home? They're not. The math just doesn't add up to keep driving prices higher. It just doesn't add up. And in the States, again, it's not as much of a situation. Your housing bubble is not nearly as big, and a lot of these people are sitting, but it's also why you're not seeing much, movement. The supply is down. We've talked about that before too, because people cannot afford to give up their 30-year locked-in fixed rate because it's going to go from 3% to 7.5%. So lots of interesting situations here. Again, though, the reason I don't get super bearish and sell everything, go short this market, is that the Fed can fix the problems by lowering rates.
Yep.
Yeah. So that's something to think about too. But there's lots to think about here, lots to digest. There's a lot of reasons not to be, just coming in this market and mortgaging everything, and going on margin to buy these stocks, thinking that we're going back to all-time highs. I don't care what the technicals look like. I don't think we're going back to all-time highs.
Here are banks that have kind of loans over 30 years here. And so here you got different ones here. You can see Q1, Q2, Q3 of how they've been adding. But I just wanted to pull this. I got this from Reuters. And just to add some information that you're bringing up there, Dennis, like actual numbers here, an estimated 331 billion, Canadian billion, but in US, it would be 245, and home loans are expected to come up for renewal next year.
That's scary. What happens then? All these amortizations go out further because the people can't make their payments. So again, it's always 25 years was the norm. That was pretty much the norm for all the banks. They didn't give out amortizations more than 25 years. They're now giving out 35, 40. Again, on these variables, sometimes they're getting into crazy things like, on these variable fixed payment schedules, that there's 90-year amortizations, a few of them out there, which is insane. You're not going to live 90 years. You never own your home. You're a glorified renter at that point in time. You're not a homeowner. You're a renter. So, I mean, there's a lot of issues here, and higher rates, again, this can be fixed by the Fed. So I can't get just like it's the end of the world and the housing bubble's going to burst and the market's going to crash and burn and everything. But the consumer is starting to get more strapped. That's the bottom line. And we can see it in American Airlines. You can see it in, like all of these, consumers, the GM and Ford disasters. Again, a lot of that is due to the strike, but also I think lack of demand is going to be coming forward here. I think people aren't going to be buying big ticket stuff. I think the consumer is eventually going to run out of cash. And what's going to start the bear market? Is when one of the big guns warns, like a Microsoft or a Google or an Apple or a Meta, if one of those companies pre-announces and says, well, we're a little bit light, they are priced for perfection, folks. Apple is priced for perfection. It cannot warn. If there was any hint that iPhone 15 sales were not going to be as good, and look at what the Wall Street does here. You know, the Apple goes down a little bit, and you have 4 banks come out defend it. The iPhone sales are great. They're great because they're defending the stock price. They're seeing the stock price come in. We got to defend it. Well, Apple gets the big pop a couple days ago because all these the
Dan
iPhone
Ives.
15 sales are fantastic here. We've got a super cycle coming. You know, all this nonsense. What I think eventually is going to happen is one of these, you know, maybe the super cycle isn't going to be that super. I'm not saying that's going to be Apple that warns. I think you're eventually going to have one of the big guns warns, and that is going to really start spooking the market because they're all hiding in it. They're all hiding in these stocks at 28, 30 times earnings. You want to hide in stuff? Hide in cash.
Intel unveiled a new AI computer processor at its innovation event, emphasizing the power efficiency and PC integration without relying on the cloud. However, it lacked specific chip performance details, and some are saying that that's what caused the decline here in Intel stock yesterday. Intel CEO showcased a laptop that generated Taylor Swift-like songs using AI. Taylor, you better watch out. Intel Core processors with AI integrations will be available in PCs from December 14th. Intel promises to make improvements in graphics and AI performance, but doesn't provide specific details there. Intel stock experienced a nearly 5% decline during the event due to lack of product details and high investor expectations.
And we talked about the high investor expectations.
Yeah,
I think everything they announced was fine. They said AI. Tim Seymour and Fast Money, we had him on the show here yesterday. Obviously, we love Tim Seymour. May have said it best. He's like, Intel is the only company that can talk about AI for an hour and tank on it. I mean, this is Intel's long-term story, which has just been an epic disaster for all investors. Joel and I know that. You know, we suffered some pain trying to invest in Intel, trying to think of the turnaround story here. I do think there is a turnaround story eventually in Intel. I do think old school tech has, you know, its day here, and it's kind of right now, it feels like, because IBM's been doing well, Cisco's been doing well, a lot of these companies. So I actually do think this Intel dip gets bought. So this isn't going to be a full-on bearish rant here. Just, you know, it moved up too much, expectations too high. You know, was it the CEO doing push-ups on, you know, the whole thing? I was like, this is again just to be a circus show here. I do think the Intel dip's going to get bought though.
What it has to do, it pulled back to this $36 area. I mean, quick run-ups in a thick stock like this can often induce quick retreats, and you just cut through that 38, 37, and 36 handle. The bulls really got to establish a bid here, just around 36. That was the area of yesterday's low. I'm not going to give too much consideration to that gap. It's not quite halfway back. Well, yeah, it is. Wow, 32 to 40. This 36. If you're looking for the triple D bounce in this one, you're trading up a nickel today. I'd like to see the big boy step here at 36 and then get back. But that's an ugly candle from yesterday in Intel, any way you put it. It was a big move, hit 40, back to 36. I'm looking to see it get a sustained bid at 36.
Yeah, I don't know if you have to just jump right in, but 36 is a big level, Joel. It's a great number you're giving.
Yeah, I like the gap there. If it can come back, I'm gonna be probably a buyer. I've been waiting for it to come back. General Mills Q1 adjusted EPS here at $1.09, beat the $1.08 estimate. Sales of $4.9 billion, beat the $4.88 billion estimate. General Mills reaffirmed full year sales growth of 3 to 4% and adjusted EPS growth of 4 to 6%. Is defensives the area that we should be looking at?
Why be in a stock like General Mills when you can be in cash? And you know what? If you took that advice 3 months ago, you're selling General Mills up at 80 and not at 66 today. So its biggest problem is high interest rates. Its biggest problem isn't going to be demand falling off a cliff. It's that there's no growth. These are cereal company staples that were alternatives to 1% cash. They were great when you had the Tina trade on, because, well, I can sit here, get 3.5%, maybe a little bit of growth with it. This is good. Now you're losing 2% cash because dividend yield's only 3.5%. You get no growth for it. And you're probably paying, what are you paying? Let's go look at the P on this puppy. 14, 15 times. So it's under a market multiple. It's come down. It used to be like 18, 19 when we were complaining about it. So it is coming down. At 11 or 12 times earnings, give me a call. I'll be interested. But 15, could it pop? Does it get, if we go into, like a market, like downturn cycle, General Mills can actually lift on that. But I think why GIS and why not cash? Cash.
Give me a green monthly candle, Len. Those are pretty thick red monthly candles there. But let me just give a little bit of positive here because there's a setup that I
Sure.
can identify for you. There's all these highs at the 65.60, 65.70 level. That's like 3 out of your last 4 highs. You popped above it. Almost 50,000 shares have traded. So I would not be surprised if it could catch a bid here at 66.50 and move, maybe move its way up closer to 68. That's the technical setup. If you don't hold this, if it opens up here at 66.50, takes 60 and then turns offered, you're looking at like 66.05, 66.10. I think they're going to sell it, but it has the potential. I just wanted to mention real quick: do we have Frank yet?
Not yet. I'll let you know when he gets in
I
here.
just want to mention, and I said this when it came out, Smucker's buying Twinkie. I mean, what a bad move that was. And it was a bet. They continue to pound that thing. Look at that on earnings day. I mean, Twinkies. I mean, come on. In this
Paying
day and age.
27 times earnings for a bunch of Twinkies. That's what they did. SJM deserves to go down. Joel, you're absolutely correct. That was just dumb purchase. Dumb money.
Can they get out of it? I mean, is it
No,
official?
they're not going to get out of it. They're going to go with it because then it would mean that they did the wrong decision. They're going to say there's synergies. We're going to find all this.
That's what it is.
But you paid 27 times earnings for Twinkies.
Who
Come
eats
on.
Twinkies?
In an environment like this, not the time to pay 27 times earnings for a bunch of Twinkies. Next.
Let's go to upgrades, downgrade. Rosenblatt maintains buy on Pinterest, raising price target to 38. Citigroup upgrading Pinterest to buy and raising price target to 36. This, of course, coming after the investor day pointed to high teen revenue growth here. What do you guys think about Pinterest?
Continues to hold up because Elliott's in there. Continues to hold up because people believe in Elliott. And that's the main reason that, this stock hasn't been hit as hard as some of the other social media stocks. So I guess Meta's held up. But Snap, you look at that, and I used to trade Snap with pins, and you can't because Elliott's in here. So dips do get bought in this. This thing gets down in the low 20s. It's been bought every single time. Elliott's been in there for a while. I don't know if they're going to turn it around or what the story is, with their, activist situation with Pinterest here. But they're still underneath demand here because Elliott's in there.
Technical comments out of me, I don't know. Trading at the highs of the pre-market session, 27.50. I mean, it's breaking out. I look at support at coming down to yesterday's low, so I maybe have an interest 50 cents lower at the top of yesterday's range. If you really get excited about this one, the rally continues. 32 cents higher would be my next target at 27.72. Really nice bump in volume yesterday, too. That's interesting. It trades 10, 11 million, trades 33 million yesterday. Get the upgrade today. We'll see if they take profits off that short-term trading.
Cody raises first half fiscal year 24 sales growth outlook to 10% and 12% from 8 to 10%. Of course, this is the brand that licenses brands such as Calvin Klein, Hugo Boss, Gucci, Burberry. And then when you take a look at their cosmetic brands, they got CoverGirl, Max Factor, Kylie. So Cody getting a little bit of a lift here. What do you guys think about this one? Have you ever traded this one?
Yeah, I do. Held up better than a lot of the other retailers. Some of those brands are okay. Some of those brands are cringeworthy. It's obviously not been a great investment for a long time. I mean, you can look out to the longer term chart. $30 back in 2016. It's $12 here today. It's bounced up nicely. I'm just not sure I'm jumping into retail stocks. I'm just not hungry. Obviously, there's been some pockets of strength in retail. We know Abercrombie and Fitch, American Eagle. There's been certain pockets of strength, but even those are starting to break here now. Ralph Lauren has come significantly down. It's always been a pocket of strength, and it's starting to show weakness here too. Kind of looks like it's ready to fall off a cliff to me. I think the consumer is just strapped a bit, and that scares me on anything. Clothing, consumer discretionary, it is, to a certain extent. So I'm scared.
Boy, 4 highs right at the 1220 area. You're opening into that. These were some highs back in August. So just keep an eye on that, up 64 cents. And just real quick, did you see Elf yesterday? Or did you see Elf over the last couple days? Finally, they're finally coming for that
Breaking
stock
that too.
down. Yeah, down another 35 cents.
Do you
So,
notice what's coming? They're coming for the leaders now. They've been hitting the
ooh,
laggards and punishing them, but the stocks have just had relentlessly bid. And Elf has went straight up for the last year. It's went from 20 to 140. It's been an incredible run here. You know what they're doing? They're taking profits because they're nervous. Investors are nervous here now. Now they're starting
Yeah.
to knock things down. Keep an eye when you start losing leadership. Again, Nvidia has broken the 450. It's hard to go super uber bullish until you start seeing Nvidia back over 450. Nothing goes straight down. The bulls were declaring victory when it bounced from 420 to 440. But you know what? This market's going to be a lot of chop. Nothing goes straight down. You need Nvidia really back up over 450, 460, sustaining a bid for this AI trade to start turning this market around here again. So as long as Nvidia is below 450, I think you're better to sell stocks.
Well, we're clear for takeoff. Clear for takeoff. Let's get to it.
all right, we're going to bring on Frank Holmes. He's the executive director of Hive Digital Technologies. He's also the CIO, director and chief investment officer at U.S. Global Investors. Frank, what do you do in your free time?
I run.
Oh, there you go.
Oh,
I didn't know Frank had any free time. The guy runs everything. So
It's
he
so
runs
funny.
and he runs companies.
I have my iWatch, and I get phone calls more and more often while I'm running with my iPhone. Yes, no.
yeah. Okay, Frank, let's get right into it. The creator of the Jets ETF, it has been grounded. I know it did get into some overbought territory, now oversold. Can the airlines overcome the screaming higher oil prices?
Well, I think it's just like we were talking earlier about the negative sentiment and attacking leaders, etc. There's this pervasive, very negative sentiment. I recently was in Europe. I flew over to Italy, and every flight was packed. This week, I flew up to Denver for the institutional 35th year of institutional investors only gold fund and gold CEOs and CFOs from around the world. The Australians, the Europeans, everyone comes to this event. And it was pretty subdued. And it's just, but the flights are packed. I try to get home early. No way. Everything is sold out. So I think we're dealing with a lot of negative sentiment. The biggest negative real sentiment here, which seems to be oil. The surge in oil prices has an impact on a particular American Airlines because it's unhedged. But there's this sort of negative sentiment. And September historically has been a bad month.
All right, well, let's just go right to the Jets, 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 the ETF performance going back 12 months here. Still not too bad, but man, I mean, that looks like a ski slope there. Give us your well, we got your fundamental outlook, Frank.
Well,
technical
on
outlook.
July the 12th, I think oil went above the 50-day moving average. And then all of a sudden you can see that hedge fund trade of getting out of jets. And you can see that the shorting, I believe, of predominantly American Airlines and Allegiant because they're unhedged. But the airlines are trading on a PE ratio, cash flow multiple, substantially below trains and trucks. And so as a mode of transportation, it continues. They're pushing to lift the age for retirement for pilots because there's a pilot shortage. I think that the supply side and growth of these airlines is basically not going to be able to grow just with more flights. So they have pricing power, and that's what we're witnessing. So I think you buy the dip. And it's interesting. I share with you because I was at this gold institutional conference, and there was a panel with some of the famous self-made billionaires in the mining industry, especially Robert Friedland, who is the founder of Sirius Radio in your cars. And there was Pierre Lassonde, who's a huge philanthropist and created Franco-Nevada as a gold royalty, and at one time was the president of Newmont. So he was commenting that central banks around the world, it's the first time that they've been big buyers of gold in a rising interest rate scenario. And gold has been soft and weak because the dollar is the strongest currency. And when you're seeing in Japan, Japanese yen, the third biggest GDP in the world, gold is up 40%. So they speculate that in the next quarter, interest rates will peak, price of gold will surge. And they comment that the central banks buying has created that gold would normally be so much lower where the rates of the dollar is today, but that they're creating a digital gold-backed currency because there's no way the brick currency is fungible. They immediately have to trade and turn it into US dollars. It's a closed economy in China. They don't accept MasterCard, Visa, American Express now. Russia's a closed economy. There's no Facebook in these places. There's no Google. It's closed from social media and it's closed economically. So how can you have something that's a fungible global currency? And when I was in Italy, I'll share with you guys, it's interesting on the menu, there's no Napa wines. There's no California wines. But in America, you get Italian wines, Argentine wines. So we have, when you look at just wine, we have a much more fungible, open society of all these choices we get. But in these other countries, there's all these different forms of protectionism. And it's most severe in China, who is most anti the US dollar.
Don't you just feel, we're looking at gold going back, you had the, the COVID low. I think there was just a lot of reshuffling of equities. You've gotten over 2,000, a couple times over the last year. Isn't it just better just to range trade this thing and, try and buy the dips and sell the rips? I just for as long as I've been following gold and as long as the different scenarios, different world crises and everything, it just seems like it never can get a sustained bid over 2,000 and hold it. I just give me a little bit more evidence here. I do have some gold holdings.
If you
I
follow
did buy during. Go ahead.
If you follow the gold conspiracy people, they will share with you and the publications that traders at JP Morgan have been found guilty of manipulating gold prices in the futures market. So they believe that there's suppression and oppression of gold using the futures market. Well, the government continues with all this money printing. I don't turn around and say that is the reason for it, but I share with you that this century, with governments, the G20 practicing modern monetary theory, that the price of gold is double the S&P 500. And I've always advocated a 10% weighting and rebalance each year, and you'll outperform. And so we have this rising interest rates. You've got to really take a look at the U.S. dollar. It's up 2 standard deviations. It's on a tear. The 2-year government bond yesterday made a 17-year high. And I think that how long can this last before it breaks the economy? I don't know that end of it, but I do know whenever it's up 2 standard deviations, price reversal usually steps in. And then I think you can see gold pop to 2,200. The thought process is that if the central banks go to a digital gold, they want to have a Bitcoin of their own, but it's backed by gold and it's controlled by the Bank of International Settlements to basically thwart what China's trying to be anti-America. And that would only give tremendous credence and see gold trade at $3,000. But we're going to wait for that. I think the short-term trade is you buy the dip because rates are going to peak here.
Well, Frank, if we want to outperform, why not just look at Hive, right? You don't need to be maybe looking at gold or the S&P. Let's take a look here at that chart. Look at this, guys.
Yeah, it's no doubt, Bitcoin has dealt with so many negative political woes. It's really sad that we see jurisdictions, little islands like Bermuda, have regulatory borders and guidelines for crypto exchanges and crypto anything, and we don't in America. So I think that even with all of that negative news, Bitcoin has done exceptionally well. And I try to point out is that there's 13,000 nodes all over the world that are validating transactions. There's no 13,000 gold analysts. There's no 13,000 institutional gold funds. It's very decentralized. And I see that the process of the government is to go after on-ramp and off-ramp. But we all know what's happened with that in the past, because we can look at prohibition. Prohibition was to stop alcohol. It didn't happen. All it did was usher in the mob. And then we had during the 30s where they basically said, we need your gold. We're going to confiscate your gold unless you had numismatics. People very few turned their gold in, and gold only went from $20 to $36. So when you have a global phenomenon like the Bitcoin ecosystem, it just goes to show you that it's something that's a fascinating alternative asset class. It's much, much more volatile than gold. And I've suggested people look at 2 to 3% in a portfolio, and then gold is 10% in having these, what they call decentralized alternative asset classes.
Frank, before we let you go, take off the Bitcoin glasses, the gold glasses, and airline glasses, and just look at everything, from a broad perspective. You've been in the markets for a long time. Rapidly rising interest rates we've had, and it hasn't killed the economy yet. A lot of things going on. I mean, if you want to, cut it, slice it, we're kind of near all-time highs here. I mean,
yeah. And I wrote about that on the weekend on Friday, and I pointed out that the S&P 500 is tremendously asymmetrical. It's not a balance right now, and it's driven predominantly by a handful of stocks are dominating its performance. And if you went to an equally weighted S&P 500, it's up 8%, not 18%. So there's a 10% spread of outer performance from only 10 names. And that's what we were talking earlier, like the NVIDIAs and the Facebook and the Microsoft and the Google and the AI phenomena of driving these up. So you do have this sort of risk. I have also studied your program for the past 9 months that I can recall every time I've been on, is that in the third year of a presidential election cycle, when the president's a Democrat and Congress is a Republican, the market is up. And it goes back 60 years of data points. I like those data points. So I do think we have to look at a phenomena for liquidity, and it's big cap liquid names that are getting the funds, because we looked at the Russell 2000 and we looked at micro cap indexes, and they're down for the year. Even when companies have good dividends, good growth rates, et cetera, as a whole, it's way lagged the market. So it's a very concentrated, big liquid names by portfolio managers and traders in this space. And it does lend itself to a risk in those technology names of just, I would say, mean reverting, but it does present a risk.
All right,
Now,
Frank, go ahead.
Oh, I wanted to add here, Frank. So I don't know if you got your Halloween costume already, but I love gold. This is what you should be right there, for Halloween. There, we got to get you on the gold member.
I do. I love it. And I truly believe that you buy the dip on gold and you hodl. This is the first time.
There you go.
It's the
From
first
Frank
time
Holmes
we've seen
here.
this scenario of gold, of the dollar up 2 standard deviations, 2-year government bonds up 2 standard deviations over 60 trading days. The odds of mean reversion are very high, and that's the opposite. Gold takes off.
Well, thank you, Frank.
All right, Frank Holmes, Chief Executive Officer over at U.S. Global Investors, joining us on Pre-Market Prep. Frank, thank you. We'll dial you up again soon.
All right, let's get back to the action. What's going on in the markets
Creeper
here?
rally, creeper rally. They had a little dip under 4,500 back at the highs of the pre-market session. We got some pesky bulls up there. Monday's high comes in at 45.1450. That's 10 handles away. That's a short-term target here for the trading session ahead of the big Fed. Triple D, what do you see out there?
It's going to be choppy. We're going into a Fed decision day at 2 o'clock. We're going to have chop ahead of it. We're going to have chop after it. I hope we get a relief pop where maybe they're not too hawkish. They don't say anything to spook the market here. And I hope we pop up because I want to sell more stocks. So I would love to get back to 450 on the S&P just to dump more stocks because I think there's a lot of pain ahead. I don't think it's imminent, though. I think we're in this lull, this week 2, calm before the earnings storm. I don't think the earnings are going to be as good. I don't think the guidance is going to be as good as last quarter. I do think the consumer's starting to slow down. I think the stocks are telling you that. There's just so many pockets of weakness. Retail's not doing well. Airlines not doing well. And you can just go on. The only thing that's really held up, to Frank's point, is tech stocks. Tech stocks have really, held up very well. But, all it takes is an earnings warning there, and that could get the party started on the downside there too. So I think there's going to be an opportunity for the bears here. I think if you're striking now on the short trade, you could be a little bit early because we're in this quiet period. I hope we get a pop. I'm selling reps.
Joel, any outlook do you want to add there?
No, I just technically for the S&Ps, I'd like to go with the daily high of 45.1450. So that was the Globex high from yesterday, and then I like a weekly level of control. Where the bulls will say, you know what, that sell off on Friday meant absolutely nothing. That dip under the 2-week low on yesterday meant absolutely nothing. And that's if we could get a sustained bid about 15 handles higher at 45.20. So kind of still trading range post expiration.
Well, I'll give you something to watch for after the close earnings that will be coming. You get FedEx and you get KBH here. Let's take a little look into these stocks.
Well, FedEx has been all cost cutting. And that's been, that's what's brought it back up here, held up a lot better than UPS. So we'll see, good earnings. I think I saw their sales are down 75%. I don't know.
What a
if that's
comeback for
correct.
FedEx. I'm just going to even interrupt you here. What a comeback it's been from 140 to 265. I would sell this as fast as I possibly could. I think this has just been an overshoot to the upside here now. I think the economy is going to go into a down cycle here. I do believe that. I think this FedEx rally here is overdone. I don't know if it's going to be in this quarter. Maybe they're going to say something okay. Maybe the earnings are going to be fine, or maybe they're going to warn. FedEx, remember, is a company that doesn't sugarcoat everything. They've come out with pre-announcements before. They're not going to come out with pre-announcement at this point in time.
This is back
but
here.
If the guidance doesn't look great, they'll tell you it's not looking great. There's a lot of companies out there that even if they think, well, it'll turn around, we're just going to not say too much to spook the street. FedEx is not that company. If they see a slight downturn, they will warn. So just be careful on the guidance here.
Yep, they warned. I remember last September, this was this big red candle, and they gave a stern warning. It took a while to stabilize.
Of the guidance.
Yep. Okay, we'll see with that.
All right, guys, let's wrap it up here. It's 8:59. My last outlook, I'll be looking to see what happens. Of course, 2:30, you guys can catch the conference right here on Benzinga. Of course, that's when the fireworks should start, but don't miss, of course, the prepared speech as that gets put out at 2 p.m. I'll be putting out a nice little recap on Benzinga and my Twitter. Guys, keep up with our Twitters. You guys see our handles right by our name. And let's get to the action, guys. It's time to get right to the open. I'm going to bring you guys over to live trading. Who's our guest tomorrow, Joel?
Raghee
Nice.
Horner. We're going to get a female perspective, a calming influence, a female influence perspective on these markets. Raghee Horner, you guys tune in tomorrow. We'll be here.
All right, guys, you guys can catch Joel O'Connor on the closing print. Dennis Dick, go do what you do best, man. Get to your trading action. And I'm going to bring you guys over, of course, to live trading. That's coming up next. Don't go anywhere, team. We got a lot more for you guys. I do want to let you guys know also a little bit about what? About, of course, the Cannabis Capital Conference that will be coming up in just a little bit, just next week, guys. Smash the like button. Let's take a look here at what's going on, of course, in Cannabis Capital Conference. You guys can check it out. The best event in cannabis right now, especially for investors out there. That's what this is about, right? You guys are looking for opportunities? Check it out. I'll throw up the link in the chat. All right, guys, definitely check that out. I want to throw up the link here. And like you guys saw yesterday, we'll have great names on there. You don't want to miss it, of course. Some big names will be there. We'll have Governor of Illinois there. We'll have Twitter sales and partnerships. We'll have Cresco Labs, TrueLeave. There's so many names. And right now, we are all big on talking about this because the truth is, who knows what can happen with Deschedule-Ize? Will we see some more companies? Investors out there, money coming back to the industry. Don't miss that. Of course, you guys can catch a little bit more about it right here on Benzinga. And if you guys haven't checked out before our Cannabis Insiders, I'll definitely give you guys the link there to check out our podcast. It's on an everyday basis. And we'll get you guys into now live trading. That's coming up next. Don't go anywhere, team. We got a lot more for you guys always right here on Benzinga. And let me know, what do you guys want to see more or less of on pre-market prep? I feel like sometimes we don't get the feedback from you guys, and we want to hear from you guys. So hit me up, guys, shows@benzinga.com, or hit the comments right after the show, and I'll make sure to give you guys a nice answer on that feedback. Because the truth is, we're always trying to make improvements here on pre-market prep. See you next time, team. Now to get you guys over, of course, to live trading. Don't go anywhere.